Welcome back to the Junius Maltby channel. We're going to take a look at the news here shortly, but I wanted to take a quick look at a coin I learned about and saw last night. This coin was commissioned to be struck by Benjamin Franklin. It celebrates victories during the Revolutionary War. And you can see Lady Liberty there on the front, and on the reverse, I believe that's Minerva, but represents France helping the United States. And the little child there is the New Republic, America, who's in the process, it looks like, of killing two snakes, and that symbolizes the victory over two key battles during the Revolution. Very symbolic and interesting coin that I took a look at last night as I was doing research for images and symbols that would be going into this channel's quarter-ounce gold piece that we're in the design phases of. So I just thought I'd share that with everyone. Thought you might find that interesting. Gold bugs. Why Russia is stacking bullion bricks like there's no tomorrow. Let's take a look at this article here. Russia's central bank purchased record amounts of gold in 2016 and plans to accelerate its purchases, retaining its spot as a global leader in the growth of gold reserves. That's according to a recent survey by the GFMS analysts at Thomson Reuters. Russian economists explain the thought process behind the bank's purchases. According to GFMS analysts, Russia's central bank purchased 201 tons of gold in 2016, more than the central bank of any other country. The bank made its purchases over 11 consecutive months, with purchases accelerating to an average of 36 tons per month between October and November as gold prices fell. So it looks like they took advantages of falling prices like any good stacker should. The analysts expect Russia to continue buying large volumes of gold in 2017, predicting about 200 tons in purchases regardless of fluctuations in gold prices, oil prices, and even exchange rates. For comparison, the report estimates the total purchases of gold by other central banks to amount to roughly 250 tons for the year. As of March 1st, 2017, Russia is sitting on 1,654.7 tons in gold reserves, making its reserves the sixth largest in the world, behind the United States, Germany, Italy, France, and China. Commenting on the central bank's moves, economist Valentin Katasanov, professor of the Faculty of International Finance at the Moscow State Institute of International Relations, told Russia's Svobodnaya Pressa online newspaper that the bank is making the right move. The bank is doing the right thing. Specialists know that today the price of the precious metal is undervalued, and significantly so. Therefore, investors looking for long-term results are investing in gold, Katasanov said. Of course, from the perspective of the short-term investor, such an investment means possible losses. The gold market includes very large speculators who periodically reduce prices artificially for some period of time, making it possible for interested investors to buy gold at a lower price. But this market also has its own written and unwritten rules. Very interesting comment there, my friends. Or should I say, comrades. There is an even more important purpose for gold. That of strategic reserve, the economist noted. Factually, this is emergency currency, which can be used in the event of a collapse of the so-called reserve currencies, including the US dollar, or in the case of a collapse of the global financial system, into a series of currency blocks, allowing for trade to occur between these blocks. Therefore, I think that gold as a strategic reserve should be in the hands of the state, that is, in the hands of the Ministry of Finance. The Russian Central Bank is not an appropriate institution for this, in my opinion. The crux of the problem, according to The Economist, is that the central bank is not entirely accountable to the president of the Russian government and is capable of making decisions which run counter to the interests of the Russian Federation, including as far as gold is concerned. The bank's goals are clear, the expert said. Gold is a good buy when seeking to ensure the country's international position. Ratings agencies, for example, look at the size of gold reserves. Furthermore, for large players, the growth of the share of gold in a country's reserves is recognized as an indicator that the country's economic authorities are trustworthy. In fact, this indicator by itself motivates the development of trade ties. Turkey to give central bank first option on buying domestic gold. From sources. Turkey is taking steps to give its central bank the right of first refusal on domestically produced gold, two sources said, allowing it to boost reserves of the precious metal without depleting foreign currency holdings. Like other central banks, the Central Bank of the Republic of Turkey holds a mix of assets, including foreign currencies and gold, as official reserves. The International Monetary Fund, IMF, has recommended that Turkey bolster its foreign reserves to shield itself from external volatility. Buying more domestically produced gold, which is priced in lira, will allow the bank to avoid depleting foreign reserves at a time when the domestic currency has been hammered by political concerns. World Gold Council releases central bank gold demand numbers. The World Gold Council publishes quarterly data about trends in gold demand around the world, from industry to investment to mining and new technologies. In February, the research group released its 2016 report on central bank gold demand, as central banks have consistently been net buyers of the yellow metal over the past 5 years or so. This is always a key area of interest for understanding the international gold market. You want to talk about a paradigm shift? Take a look at this chart of central banks continuing to, quote, gobble up gold. As you can see, from 1995 to 2009, we see central banks were net sellers of gold. They were dumping gold on the market. Then we see around 2010 a sea change. Something switched. Of course, there was the economic crash back in 08 and 09, and you can see central banks right about that time slowed down in how much they were selling gold. They even began to slow down 3 years before that. And then all of a sudden they became net purchasers, gobbling up and hoarding gold worldwide. I think theories surrounding the reasons behind this vary, and I don't know if any of us will ever know the closed door meetings and the discussions that took place that instigated this shift in policy. We heard from Ben Bernanke once that the reason they hoard gold is out of tradition, but I think all of you out there on the channel know the reasons are a little bit more elaborate than that. Prior to 2010, the last time central banks were net buyers of gold was 1988. After over 2 decades of largely shedding gold from their reserves in order to divert that capital elsewhere, several central banks began increasing their gold holdings at an unprecedented pace. Back in the 1990s, by comparison, central banks were clearly net sellers of gold. This was led by the Bank of England, which rather infamously dumped millions upon millions of troy ounces of its gold reserves onto the global markets over a period of several years. Junius Maltby notation and asterisk, at the lowest price in decades. The politician to blame, most likely Britain's own Gordon Brown, whom we've named after that time period, Brown's Down. We've covered this briefly in the past, and we've done some in-depth articles as well, but we're going to cover this once more. Why Islamic finance is set to transform the international gold market. By Raymond Michaels, international banker. After several years of rather unspectacular market activity, gold came roaring back in 2016. The year saw investment demand for the precious metal rise by 70%, while gold-backed exchange-traded funds, ETFs, experienced their second highest inflow of investor interest on record. On December 5th, the Accounting and Auditing Organization for Islamic Financial Institutions and the World Gold Council jointly announced the issuance of Sharia Standard Number 57 on gold and its trading controls. The standard sets out for the first time the rules and guidelines for Islamic investors to participate in the gold market, explaining which specific gold-based products are permissible under Islamic law. The new standard, however, completely changes the prospects for the Islamic world and allows its current 110 million investors to buy vaulted gold, gold savings plans, gold certificates, and physical gold ETFs. Indeed, by late February, the world's biggest ETF, the SPDR Gold Trust, which has a net balance in excess of $30 billion, had announced through its marketing agent State Street Global Markets that the fund had been certified by Amini Advisors, a leading Sharia advisory firm, to be fully compliant to the new Sharia standard. According to Sharia scholar Mohammed Daoud Bakar, moreover, the standard may also open new gold demand to central banks. Going forward, therefore, investment firms are likely to ensure that their products and services are increasingly accommodative of Islamic investment rules. Given that the new Sharia standard also applies to silver products, Canadian wealth management company Bullion Management Group launched a silver fund, which the company's founder and chief executive, Nick Barishev, expects will comply with the new AAOIFI guidance. Malaysia's Hello Gold became the first Sharia-compliant online gold platform, allowing investors to access gold through a mobile app, while the Singapore Exchange also announced in December that its gold futures contracts are certified as Sharia-compliant. Although the contracts do not have much market liquidity at present, SGX hopes it can target Islamic investors in order to rejuvenate interest. So that's an interesting part. I did not know that there was also a silver component to this new Sharia standard, and we're looking at another 110 million potential investors that the silver bullion market is now going to be open to. Taking a look at the economic warfare sound money front, Texas bill would establish gold and silver as legal tender and take on the Federal Reserve money monopoly. Austin, Texas, April 4th, 2017. A bill introduced in the Texas Senate would establish gold and silver as legal tender in Texas. Passage of the bill would create currency competition in the state and serve to undermine the Federal Reserve's monopoly on money. Senator Bob Hall introduced Senate Bill 2097, SB 2097, on March 10th. The bill includes a number of provisions to establish gold and silver as legal tender in Texas. It declares specifically that certain gold and silver coins are legal tender and prohibits any tax, charge, assessment, fee, or penalty on any exchange of Federal Reserve notes, dollars, for gold or silver. The bill authorizes the payment of taxes and fees in gold and silver in certain circumstances. It would also prohibit the seizure of gold or silver by state authorities. SB 2097 also included provisions relating to gold and silver clauses in contracts, prohibiting payment in dollars if the contract calls for payment in gold and silver. Legally enforcing these contracts through state law would serve to encourage their use. Along with the establishment of a Texas gold depository authorized in 2015, passage of SB 2097 would set in place all 4 steps states can take to encourage sound money and take on the Federal Reserve. Man, Texas is awesome. An important step forward. While the debasement of the currency is the result of federal policy and banker collusion, the effect is broad and deep. While there has been talk about reform, or at least an audit of the Fed, it is virtually a certainty that the federal government will never relinquish the power it enjoys through control of the monetary system. That said, there are practical steps that can be taken at the state level to promote the use and acceptance of sound money and undermine the Fed's monopoly on money. Passage of Senate Bill 2097 into law would mark an important step towards currency competition. If sound money gains a foothold in the marketplace against Federal Reserve notes, the people would be able to choose the time-tested stability of gold and silver over the central bank's rapidly depreciating paper currency. The freedom of choice expanded by the legislation would allow Texans to secure the purchasing power of their money. Currently, all debts and taxes in Texas must be paid with either Federal Reserve notes, dollars, authorized as legal tender by Congress, or with coins issued by the U.S. Treasury, very few of which, if any, none, have gold or silver in them. But the United States Constitution states in Article 1, Section 10, no state shall make anything but gold and silver coin a tender in payment of debts. Senate Bill 2097 takes a step towards that constitutional requirement, ignored for decades in every state. Such a tactic would undermine the monopoly or the Federal Reserve by introducing competition into the monetary system. Professor William Green is an expert on constitutional tender and said when people in multiple states actually start using gold and silver instead of Federal Reserve notes, it would effectively nullify the Federal Reserve and end the federal government's monopoly on money. Quote, over time, as residents of the state use both Federal Reserve notes and silver and gold coins, the fact that the coins hold their value more than Federal Reserve notes do will lead to a reverse Gresham's law effect, where good money, gold and silver coins, will drive out bad money, Federal Reserve notes. As this happens, a cascade of events can begin to occur, including the flow of real wealth toward the state's treasury, an influx of banking business from outside of the state, as people in other states carry out their desire to bank with sound money, and an eventual outcry against the use of Federal Reserve notes for any transactions. Once things get to that point, Federal Reserve notes would become largely unwanted and irrelevant for ordinary people. Nullifying the Fed on a state-by-state level is what will get us there. We all know what power-hungry and greedy elitists will do to maintain their stranglehold and grip over currency, power, money, and we know that they hold the monopoly on force. They have weapons, troops, they have the entire might of the U.S. military and the military-industrial complex. It's a small action like this that could escalate, meet resistance through, of course, the political process, and eventually escalate to the point where, well, the soapbox and the ballot box are no longer being acknowledged, and the cartridge box is the last redoubt for the maintaining of freedom and liberty. I could easily see the feds and the banking elitists that are their masters exhaust all efforts and ultimately meet with violence their resistance to this type of exercise in liberty and freedom. Well, we've seen a global move towards gold today. We've just kind of looked at a few headlines and we've seen the ongoing move towards using gold and silver, the investment of them, the expansion of gold and silver being recognized globally. Keep stacking. Thank you for participating in the Junior Small Pay channel and have a great day and rest of your afternoon.